Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday, the 28th of November, comes to you from London. And we start by looking at the dollar, as always, rising a little bit over the last day, but we are still seeing that we are bearish on the short-term chart. Medium term, we are below the cloud still. We may just find some support here now, and that could give us a chance to emerge out of the cloud. The key thing is, will the dollar make a lower low? This target suggests it will, but we are seeing support being met on these charts, so it's a really important moment. If we look at the euro, we're seeing here euro deteriorating, coming back to find support on the short term on the cloud. And again, just in this cloud in reverse is euro dollar. If we make a new high, of course, that would be bullish. So 120 is the very critical level for euro dollar. We need to keep an eye on that. Japanese yen dollar is still weak here. All the upside targets that we saw, just one left. There were four at one point, all on these buying thrusts. So there's been a reversal in fortunes there, but we are sitting on support. So we may still see the dollar recover yet. Sterling looking fairly sideways at the moment, about this 133 level. It's been here for a couple of days. We are still looking bullish. The key thing is, can we get through the cloud on the long-term chart, or will we see the dollar coming back? Sterling still weak against the euro on the short term, medium term looking better, but long term still bearish, with downside targets hanging over us. Sterling Swiss we're seeing is flat at about 130, and the Aussie dollar we're sitting at about 175, and we've been at that level for quite a few days now. The S&P 500 sitting at 2,601, so through that 2,600 level. The Nasdaq also looking still very strong. The Dow holding its gains, and the Russell 2000 deteriorated slightly yesterday, but very slightly. All the US markets still looking pretty bullish. The S&P future down 0.1%, and the Nasdaq E-mini down 0.05%, so little change there. Looking at the FTSE 100, sinking lower again this morning. Short-term chart just starting to turn bearish again, with downside targets not yet activated, but about 5% downside. So we are seeing the UK market just weakening again, relatively weak compared to the US for sure. Looking at the DAX is actually weakening again on a stronger euro as well on the short-term chart. And the Nikkei is also below the cloud on the short term. Hang Seng is looking quite resilient. Shanghai is bounced a little bit, having had quite a few negative sessions, taking us below the cloud on the short-term chart. And the Sensex is holding its gains bullish on all three time frames. The Sensex, the S&P 200 Australian index, just still holding its gains, looking a bit better. Brent crude sitting at 63.69. We've been almost at this price now for a few days. We're just sort of sitting here, but we do have good upside targets into the 64 area, 64.20. WTI just deteriorating slightly on the short-term chart, less clear targets, and we do have a downside target of 55.66 activated. That's about 3.6%. Nat gas future just improving slightly, but still below the $3 level. Copper sinking away there, so we are just seeing that as a proxy for global sentiment. Looking at gold, gold is holding its gains, put in quite a good day yesterday and activated a new upside target to 1331. On the short-term chart, we've got 1309, 1315 and 1331. So gold looking quite a bit better, and we do normally see gold doing quite well in the first part of the year, so into January we may see a rise in the yellow metal. Silver not looking quite as good as gold. And if we look at the 10-year Treasury yield sitting at 2.3%. Apple holding its gains strong. Google is looking very strong. Amazon also looking strong after the holiday season, the shopping. And Facebook sitting at 183 now, so getting through that 180 barrier now quite convincingly. And Microsoft looking better, coming back through the cloud as well. That's it for today. Until tomorrow, happy charting. See you then.